Hello, everybody. This is Denise Barrett. I am a realtor and land broker here in North Texas and a host of The Real Deal. Thanks for stopping by today. I'm excited to see you. We have an opportunity to chat every Tuesday where we provide information for both buyers and sellers for the real estate process. So today we're starting the question and answer series that we call From the Horse's Mouth. This is where you have an opportunity to ask questions of different professionals so that you get the inside scoop on topics relating to buying and selling real estate. So today we're talking to Richard, who is a mortgage broker. Brokers are a different animal in that they have access to hundreds of lenders and they seek to find the products that best suit a buyer's needs. So I thought he would be a great resource to ask your questions from. So this is how that conversation went. I hope you enjoy. Everybody, as promised, this is Richard Woodward from Nexa Mortgage. He is our very hapless volunteer to answer your mortgage questions. So Richard, thanks so much for being here. I so much appreciate it.
It's my pleasure.
So tell the folks a little bit about who you are so that I can legitimize that you are indeed a horse's mouth.
All right. Well, I'm Richard Woodward with Nexa Mortgage, and I've been a loan officer, a branch manager, a company owner over the course of my 25 years in the business.
Wow, that's a long time.
Yeah, it is a long time, you know. Retirement in a few, so.
Yay! So if he doesn't know it, nobody knows it. That's what I'm telling you here. So are you ready for the questions?
Of course, let's go.
Now these came from our viewers. They came from Facebook. They came from email. They came from my mailbox down the street. That was weird. But anyway, these are the legit questions that I know that you can know the answer to. So,
all right.
So here we go. So are internet or in-person lenders better, and what's the difference?
Well, I would say today in the modern mortgage market, there's not really a big difference between an internet lender and an in-person lender in that everybody's on the internet these days. So what you have to do as a consumer is, if you're wondering whether a local lender or we're in Texas, someone in California may be a better lender for you, you just have to do a little research. I would search the person's name first with Google to see if they have any reviews, and read the reviews with Google, and then just ask them questions. You know, how often can you communicate with me? When can you talk? Things like that. That's what's going to be most important, I think.
Do they get offended if you ask them questions like that? If you interview them for the job, sort of?
Well, if they get offended, I think then you would move on to the next person.
Fair point.
Yes.
Okay, question number 2. Can a lender help improve my credit score?
Well, theoretically, a lender can advise you as to what to do, but ultimately it's going to be the borrower's job to improve their credit report.
Okay.
So most lenders have a tool called Credit Expert, which is provided by the credit companies. And I can click on this tool and it'll show me things that would do that the client would have to do in order to improve their credit, such as paying down on a credit report, paying off an account. But yes, a good lender should be able to help you, direct you in the right direction.
Okay, awesome. Okay, now this is probably a loaded question, but do all lenders offer the same kinds of loans, or are some special to certain lenders?
It's not a loaded question. That's a very good question, because not all lenders have access to all loans.
Oh.
So most loans that are originated in the United States, right now about 75% of the loans that are originated in the United States are originated by the major banks.
Okay.
And when you have just the major banks, they have only their in-house products. They don't deviate from those products. And if you don't fit within their box, then you're not going to get a loan. However, little shameless plug, Nexa Mortgage is the nation's largest mortgage broker. We have over 250 lenders that we work with. So I would talk to my client, I would determine what their needs are, I search my databases of all my lenders, find the appropriate loan for them, and then I can place them with that loan.
So everyone has the same kind, but there's a broad range within there, and a broker will have more access than an in-the-box lender.
Correct.
Okay. All right, now if I want to buy this summer, say I'd like to close in June or July, sometime before the kids go in school, when should I know who my lender is and start those conversations?
Well, that's kind of a loaded question because it really depends upon the client. If the client has concerns that perhaps they might have some credit issues, might have some income that's a little bit different, then it's better to start early.
Okay.
Now, if you know you have a 780 credit score and you've worked for the same W-2 company for W-2, meaning that you get paid directly from your lender, from your employer, for the past 3 or 4 years, then you probably need about 45 days advance.
Okay.
Anybody else, I would recommend the sooner the better.
Okay.
It never hurts to get started earlier, and then it gives you a way to, a path moving forward to get to where you want to be.
Okay. So the more complicated your path, the sooner that you start that conversation.
Yes.
Yes. Kind of works the same way for realtors too. Okay. Let me give you this scenario. So I have pretty good credit, say in the 700s, and a solid job, but I don't have a lot of savings. Is there any hope for me?
Of course. There are a number of different down payment assistance programs that are available. If you don't have cash, you could also get a gift from a family member. I think we're going to talk about a down payment assistance programs in subsequent questions, so we'll broach it then. But like for instance, with me, I have over 37 lenders that offer some sort of down payment assistance. So cash is not always going to be a problem.
That's so encouraging because not everybody knows that. I don't know if it's one of those, come here, let me tell you something, situations.
It's one of those myths, and there's a lot of mortgage myths. Yeah.
Okay, so I guess this is the follow-up question then: is what is a down payment grant, and are they hard to get?
Okay, there's a difference between down payment assistance and a down payment grant.
Okay.
So a down payment grant often is provided by a government agency in affiliation with a state or a city locality, and those receive grants from the federal government, and they can distribute them to potential homeowners. A grant does not have to be paid back.
Okay.
Now, a number of down payment assistance programs are not grants. You can still get 100% financing, but you may have to pay that assistance that you got back in the form of a second mortgage or a lien against your property that's paid back when it's sold.
Okay. So it's kind of an extra loan to get the loan.
Yes.
Okay.
For instance, we just have a new program that just came out. It's 100% FHA financing for a client with a 580 credit score or higher. And it is a true grant. So there's no repayment period. And I can refinance that client in 7 to 8 months, and they don't have to pay that back, and they can get a lower rate. So
okay.
You get a two-step great process.
Oh, well, that kind of broadens the availability for a lot more folks then.
It does.
Okay. Is a conventional loan better than the others, like FHA or VA, or does it make any difference really?
It depends on the client's needs. So a conventional loan is a great loan. If you have 20% down, probably a conventional loan is going to be the best loan for you because there's no mortgage insurance.
Okay.
You get great rates, and it's easy to obtain that loan. If you're a veteran, by far, a VA, particularly if you have some service-related disability, a VA is by far the best loan you could get. It's government. It's a government type of loan. Therefore, the rates are better than a conventional loan. There's no mortgage insurance, and with a disability, there's no funding fee. FHA is a great loan for clients that may have a credit score between 500 and, let's say, 720.
Okay.
Because in today's market, that FHA interest rate is going to be better for you, and the mortgage insurance premium monthly is going to be lower than a conventional loan with low down payments.
Okay.
So it really depends on each individual circumstance.
So I guess that's where getting to know the client is really important. Where are you? Give me your life circumstance, because things like the VA or the VA disability, all of those little factors that you may not think are important could be really important.
Exactly.
Gotcha.
That's why shopping rates online is not always the best thing, because if you are not an educated in the mortgage business, you don't really know what you're looking for. So a expert mortgage lender should be able to direct you in the right direction.
Great. Okay, this is something that I don't even really know the answer to. What is a rate lock, and when does it expire?
Okay, so a rate lock is what it really sounds like. You're locking in the interest rate. So when you go online, you're shopping for a mortgage and you get a pre-qualification and you get an interest rate. A lot of people think that is what they're going to get, and that is not the case. The lender has to actually lock in that interest rate for you in order to keep that rate from moving. So there's different rate lock periods. It can be generally a 15, a 30, a 45, or a 60. And the longer the lock, the more expensive that loan is going to be for you insofar as either a fee or the higher interest rate.
Gotcha.
So locking the loan is actually keeping the rate from moving that point forward.
Okay. This is one I really have a hard time wrapping my head around. What are points, and is there a normal amount?
There is no normal amount, but an actual point, what the point is buying down the interest rate on the loan on a permanent basis throughout the entire life of the loan. So when you're buying it down, you're paying a point, and a point is a percentage of the loan. It can range from an 0.125% points to whatever you are comfortable in paying. The determining factor in what you should be aware of is that your lender should be able to provide you an analysis tool that shows you if you pay this point, or let's assume 1%, will it be better than not paying a point in the period of time in which you'll be using your loan? Not everyone is going to use their loan for 30 years.
Gotcha.
So if you, like in today's market, we'll probably be refinancing most people within 24 months.
Oh, yeah.
So it wouldn't be wise to pay a lot of points or discounts to buy down the interest rate.
Because you're only going to suffer with it for a couple of years.
Exactly. The amount of expenditure for the points will not be recouped by the savings in the higher interest rate in the time in which you hold it.
Gotcha. So that's where we kind of figure out where you are in your life, right? Is this your for now home, or is this your forever home? And that could determine how you want to finance it.
True, yes.
Okay.
Or is the market at its peak and we're expecting it to be lower? That's something you need to take into consideration.
Those crystal balls.
Exactly. I wish I had one. Yes.
Okay. What is the difference between pre-qualified and pre-approved? Which one is more solid, and does either one guarantee that you're going to get the loan? That was a three-pointer.
Yes. Okay, let's start with the difference between a pre-qualification and a pre-approved. So in my career, I have seen so many people that have come to me and they have been what they think is pre-approved with a major online lender.
Right.
And then they
got a letter from online that says you're pre-approved.
And then they they write a contract and they start the process, and then the underwriter says they're declined. And the reason being is that in most cases that the applicant has not provided documentation to the lender to verify their income and their assets.
Okay, so here's a question that I thought was pretty funny, because in my brain I had the same question. So I'm paying interest on the loan. What are lender fees being added to my loan, and who am I paying?
Well, that's a very good question. And the one, you have to really understand how mortgages are what we call manufactured. So mortgages are, if I give someone a mortgage, or if Bank of America, or if Chase, or Rocket, or whatever, if they give you a mortgage, they're probably not the person that's going to collect the interest on the loan.
Okay.
So when we generate a mortgage, there's a number of different people that will actually touch the loan or have the loan throughout the life of the loan. So the originator will originate the loan, and they make their income from a number of factors, but some of them are fees, and some of them are going to be what we call yield spread premiums and servicing releases. Those are the back of the end of the thing. And then the person that collects the interest is actually shareholders or bondholders throughout the life of the loan. Oh. So there's a difference. So why do you have lender fees? It's because you have to support the origination department. So fortunately, when I originate a loan, I don't charge an underwriting fee, or I don't charge a processing fee. Most companies do, and that winds up costing most clients in the neighborhood of $995 to $2,000. So with us, that's a big savings. But those go to support your processing team, your operations team, things like that.
Okay, so there's more than one Yahoo touching your loan.
Exactly.
And they got to make a living.
Exactly.
Okay. Okay, now we're going to switch gears a tiny bit and talk about lender requirements. Okay, because they ask for a lot, and sometimes it can feel a little intrusive because they do kind of a deep dive.
Oh, yeah.
So I guess my first question is, a lot of personal information goes to my lender. They have my identifying information, they have my money information, they have all kinds of personal stuff. So I guess my question is, who sees that information, and is it protected?
It is very well protected. In fact, we say it's very well protected. We try to protect it as the best we can in the industry. I mean, there's been a couple of major lenders recently that their systems were targeted and hacked. That happens from time to time. It's very rare. But for the most part, mortgage lenders are highly regulated. We have to operate off of VPNs, extra layers of security, and we are not allowed to give access to anyone that's not germane to the transaction. So if I'm originating your loan, the underwriter is going to see your information, and the closing department may see it, but that's pretty much anybody that's going to really see your information. The loan servicer will have access to the information after the loan closes and funds, so that they can identify you as the client and attach you to that loan. But it's very highly regulated and very secure.
Okay. All right, here's another kind of leading into the tax return. So, I mean, I get if I'm a W-2 employee, you want my W-2 and at least 2 years tax returns. Do you, I file it online. So do you need like the whole return plus worksheets plus all the little extra pieces of paper, or do you just need like the 2 or 3 page 1040?
Well, if you're filing a tax return and you're doing a simple 1040, it's usually, I think it's 4 or 5 pages is all we need, but we need the entire tax return. We don't need the worksheets. If you do file, let's say for instance, you have a rental property, you have a Schedule E for rental property. We will need your Schedule E.
Okay.
If you're filing anything such as maybe you have a small business at home, if you're filing a Schedule C, that's for profits from self-employed and income. We'll need those as well. But we don't need your worksheets.
Okay.
But if you want, and it's easier, just send the whole thing. We'll take what we need out of it.
Okay.
Yeah, it's easier.
Well, take what you want.
Yeah, off those 100 pages, we're only going to need like 8 or 9, but we could take them out for you, no problem.
That's what I'm paying you for.
Exactly.
You figure it out.
Have at it, yes.
Okay. Okay, so suppose that I don't have a W-2 job, I have a 1099 job. I'm I'm a contractor, I handle my own business. My income varies month to month, right? So how do I prove to you how much I make?
Well, that's depends. There's a couple of different ways we can do this. By the traditional sense, if you're getting an FHA, a VA, or a conventional or USDA loan, then we're going to use your tax returns in conjunctions with your 1099, because if you're a self-preparer or if your CPA prepares your taxes, a 1099 individual is allowed to take deductions that a regular W-2 person is not. So those deductions are subtracted from your gross revenues, and then you have what we call an adjusted gross income.
Okay, so we live in the digital age, and most of my accounts are online. I only have one account where I could actually go into a bank and talk to somebody. So I know you're going to want those statements. I get them digitally. Is that okay for you?
Digital statements are perfect, but it has to be formatted in the correct format.
There's always something. There's always something.
So please don't send me a snapshot or a picture with your phone. Those are very difficult to work with. So and I've never seen an online bank or retirement company that does not provide monthly statements that you can download. So don't do a transaction history, don't do a screenshot. Go into your online account and find your statement, download your statement to your computer, an actual PDF statement, not a transaction history, and then those are what we're going to need. 2 months is normally the requirement for most mortgages.
Okay, so it's not as complicated as I thought it might be. Okay.
It's very easy.
Okay. I've heard a pain point from a couple of buyers where they get frustrated because the lender seems to be asking for the same information over and over, like an income or another piece of a tax return or something like that. So is it because time has elapsed and we want to make sure everything is the same, or is there another reason?
Well, the main reason is incompetence, if you ask me. But
okay, well, there was that.
To put it bluntly, so a lot of the major online lenders will have an origination department in Idaho and a processing department in Orlando and an underwriting department in Seattle, and those people don't always communicate effectively to one another.
Okay.
Or they may have a processor or a person collecting the documents that's way overloaded and forgets that they have these documents. So that's why you're getting asked many times. So, one of the questions you might want to ask your lender, if you're afraid that might happen, is who is my touch point and who is responsible for my documentation? In that case, it would be me. I would be that person, and I'll make sure that you don't get asked multiple times. However, there are things like bank statements that have to be within the last 30 days. So maybe if you provided one that wasn't within the last 30 days, you may need to provide an updated one.
Okay.
Your bank statements, your pay stubs have to be within the last 30 days. You may need to provide an updated one.
Okay.
But for the most part, you shouldn't have to replace the exact same document if you're working with a competent lender.
So in my mind, then it makes sense to have a file on your computer of everything that you have given them in case they ask for it again, but be prepared for updated payroll statements because time has elapsed.
Time does lapse, yes. Especially if you have a longer closing, like a 60-day closing or something like that.
Okay. Well, there you go, guys. Those were your questions. The horse, our dear friend Richard Woodward has answered them. Thank you so much. We so appreciate
it's my pleasure.
You taking the time to talk to us.
My pleasure. Enjoyed it.
I'll talk to you guys soon.
Bye, guys.
Well, there you go. I hope Richard and I addressed all of the questions that you had in your mind. If something comes up and you have a new one, just go ahead and deposit in the comments section. I read those every day and I will get that answered and get it back to you. So thanks very much for joining us today. It was a pleasure to provide this information to you, and I hope you have a great rest of your week. Bye-bye.